Hi everyone. In this video, I'm going to go over job costing. Job costing is a way to keep track of your product costs. Job costing is unique to each job. So in the job order costing, you're going to have many different jobs happening at the same time, but you're going to keep track of each of those jobs. Companies use job costing for many different reasons to better estimate the cost of jobs in the future. So the job cost sheet is going to help you keep track of all your costs. So you can go, for example, to look at the cost of manufacturing a couch for a furniture company. You can totally analyze each piece of that couch to see what it costs to make. It's going to help managers make better decisions. It's going to help analyze labor and also make decisions off of that. It's going to help you get profitability by job and to help you decide on the jobs that are most profitable. Okay? Job costing would be used by just some of the companies. Of course, there's not everyone listed here. Special order printing, building construction. So if you have a builder who is putting an addition onto a home that is completely customized for that home, they're going to keep track of those costs. And the reason being is to many different reasons, but to isolate the profits, also to help them in the future better estimate what it's going to cost them for those jobs. Furniture manufacturers would use it. It would depend. Are you building a couch? Are you building a kitchen table? Are you building a recliner? So you want to keep track of those different costs. Hospitals, unfortunately, a lot of times people think, oh, well, hospitals don't look at accounting. Oh, yes, they do. They absolutely do. You have to look to see what it's costing the hospital for these services. Law firms, accounting firms, they keep track of all the hours that they're putting into particular jobs. This week I do want you to know the difference between process costing and job order costing, or job costing. But it won't be until chapter 5 that we'll focus on process costing. Job costing is in chapter 3 for this example, but we will see process costing in chapter 5. Process costing is a method of assigning cost to units of production in companies that produce nearly identical products in large quantities. So they're not going to keep track of it by job. They're going to keep track of it in large quantities. And we'll see in chapter 5 how they will do that. Types of companies that would use process costing are oil companies, gas companies, a paint company, cereal companies, General Mills. They'll use process costing. There's similarities between job order and process costing. They're both going to assign direct materials, direct labor, overhead. They're both going to use those account names: manufacturing overhead, raw materials, work in process, and finished goods. Remember, those are all asset accounts. You'll increase those with a debit, you'll decrease with a credit. So it's basically the same, the cost flows between the two types of costing systems. So the events in a job order costing: you're going to receive the order from a customer. So you're going to receive an order for a lazy boy recliner or a recliner chair. You're going to predict the cost to complete. So you're going to see there's going to be a lot of estimates in some of the costs, which I'll go through. You're going to negotiate a sales price and decide whether to pursue the job. So your sales price, you got to make sure that you're selling above what it's costing you to make the product. Otherwise, you don't want to go through it, right? You're just wasting your time. And then lastly, you will schedule the job, and that's going to come in with job order costing, where you're going to keep track of all those costs for the particular job. To help them keep track of costs, there's many different records, but I wanted to focus on the ones that are most important. So the particular company is going to purchase raw materials. It's going to show a detailed information about each item in stock, how many units are, what they cost them, okay, and the requisition number. So in this case, it's 7235. That is the requisition number. Next example is the bill of materials. So the bill of materials is going to be prepared by the engineers and for each job. So it's going to list all the raw materials needed to manufacture a particular job. The next example is an example of a materials requisition. So materials requisition means that they've gone to get those materials and now they've started working on those to complete a particular job. This is an example of a healthcare company, and so looking at what they need in order to fulfill this job. Notice the number over to the far right, that's the requisition number, but then the job order cost number is over on the left. It is job number 603. So they're going to watch all the costs for job number 603. The next item, which you will do in your homework this week, is you're going to come up with a job cost record. A job cost record is also known as a job cost sheet. This is going to tell you, this is going to keep track of this job and how much it cost you to do this particular job. So this is very helpful, again, for jobs in the future. So you can go back to this job cost record and you can see what it actually cost you to do the job. Notice it's broken out in all the product costs, direct materials, direct labor, manufacturing overhead. Okay, so for job costing, oftentimes you do not know your manufacturing overhead until after the job is complete. So you're going to allocate manufacturing overhead to a job, all right? And remember, manufacturing overhead are oftentimes indirect manufacturing costs. Examples would be depreciation, factory utilities, property taxes and insurance on the factory. Remember that word, it has to be associated with the factory. Factory equipment maintenance, salaries of factory janitors and supervisors. Those will go in overhead costs. You're going to learn, and you will do homework on this week, you're going to come up with a predetermined overhead rate. I will totally show you how to do that, but before I do, let me tell you why you're going to do this. Here's why. Overhead is not incurred uniformly during the year. Actual overhead might vary from month to month. Predetermined rates make it possible to estimate job costs sooner. So that's why you're going to come up with a predetermined overhead rate. All right, here's how you're going to go about that. You're allocating manufacturing overhead to a job. You're going to estimate the total manufacturing overhead cost for the coming year. So look at the particular problem. Isolate what they're estimating the total manufacturing overhead costs are. Step 2, you will select, or your company will select, an allocation base and estimate the total amount that we used during the year. You will come up with one. Sometimes companies can come up with more than one, but you will see in the homework that you will only come up with one. Okay, we'll do practice problems where I'll show you where we'll do all the different allocation bases, but when we do the particular problem where you'll figure out the cost of the job, it will only have you do one allocation base. Just so you know, allocation base is also known as a cost driver. Here are examples: direct labor hours, total direct labor cost, and machine hours. Just always know your allocation base will always be your denominator. Here's how you will do it. Allocate manufacturing overhead to jobs using a predetermined overhead rate. Clay uses a predetermined overhead rate based on direct labor costs. That's the cost driver to apply overhead to jobs. So the numerator will be estimated total manufacturing overhead costs for the coming period. When you're taking your notes, please underline the word estimated. Very important. So that's your numerator. Your denominator, you draw your fraction bar, your denominator will be the estimated total direct labor cost for the coming period. Again, underline the word estimated. Apples to apples. Both numerator and denominator in the predetermined overhead rate are estimated. And then you will just compute your number. So in this example, the estimated manufacturing overhead costs were $350,000. The estimated total direct labor costs were $280,000. Divided out, you will come up to a decimal initially. So your answer in your calculator will initially be 1.25. Again, you got to move it 2 places to the right for your percent. So in this particular case, it's 125%. Don't forget the percent key when you're figuring out the amount. All right, next, you're going to compute the overhead variance and label it as underallocated or overallocated. Okay, I'm going to go back here for a minute. Whoops. I'm going to go back here for a minute. So what you will do in a particular problem is it will give you the direct labor costs. So total direct labor costs actual for a particular problem. And then you'll just take your predetermined overhead rate and multiply it by that actual number. Okay? So let me show you. Okay. All right, so then once you have your allocation, you will come up with differences. So what happens if actual results differ from the estimates? Well, your results will either be underallocated or overallocated. I want you to know this is also known as underapplied or overapplied. So, one textbook calls it underapplied, your textbook calls it underallocated. So I like to put both, especially if you've had accounting before and you've seen it labeled differently. Okay? And then once you figure that out, you'll adjust cost of goods sold. During this week, you will not adjust cost of goods sold. That will be a later module that I'll go over that. In the next slide, I show you what happens. However, again, this week, you're not going to adjust cost of goods sold. I'll go back to that in a later video. Okay? All right, so I just wanted to go over that in detail first before we started crunching the numbers. The next video, we're going to go over how to do the particular problems so that you know what to do. Okay? All right, see you soon.